And that's one of the things that we look to do with our portfolios, our strategy, our tactical wealth portfolio is we want to change and shift sectors and pockets and areas of the market based on changing market conditions. And I think the commodities, whether the physical commodities, but also the stocks and equities related to them, are showing a whole lot more strength now than we've seen in prior years. And I do think there's a good chance this could be the early innings of a longer term commodities super cycle, so to speak. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It's Friday. It's a good week, good day in the markets. Things have been moving in the right direction, which is awesome to see. We got good news in the world, and markets and portfolios are bumping back and getting up to all-time highs. How you doing over there, Greg? Markets turning up. Weather's getting a little bit warmer. Spring's in the air, which is good to see.
What more could you want, right? It's Friday. It's been a good day, good week, good month, honestly. So no complaints. Everything's moving in the right direction. Markets, we were joking about it. Weather's moving in the right direction. Nothing to complain about here. But what about you? What's the latest with the hockey? I hear. What about the tournament last weekend?
Oh yeah, that went well. It was good. It was good fun. Connor had a big shootout goal. He actually had his season highlight. He put one in top shelf to win a game in the shootout. So that was an exciting thing. Now we're in a tryout season for next year. So we got
that's awesome.
Tryouts are teed up for next year's team. It's crazy now, but the tournament went well. But yeah, now we're shifting gears after the next few weeks away from hockey. But how's Leo doing, Greg? We never get to hear anymore. We're just hearing about my kids and my family. How's Leo doing?
No, it's good. No, he's doing good. He's just 14 months. He's just starting to walk, not on his own. He has the walker. He's babbling a lot. He's saying "mama." Hasn't said "dada" yet, but that's okay. I'm sure that'll be coming. But no, he's good. He's moving around. It's been a ton of fun. So it's all good. We're not into the sports yet, but he has a soccer ball. He's throwing it around and everything. So we're trying to start early.
He's not on any competitive sports teams.
Not yet. Maybe one day, and then you'll be hearing the updates about Leo. But until then, it's all good.
Hey, that's awesome. So all right. Well, yeah, I think a couple of things. We wanna just give a little high level overview of the markets, the portfolio. I mean, what's nice, what we're seeing today is it looks like things are opening up. The Strait has opened up. Oil is flowing, so you're seeing pretty significant move downwards this morning in oil prices and a pretty significant move upwards in markets, which is good. And that's one of these the story that we've been saying for weeks here is that's what we need. We need that to open up. We need oil prices, at least in the short term here, to come down. And that's what markets were looking for. It takes some of the at least short-term inflationary pressure, oil price pressure, interest rate pressure off the markets. And so we're seeing those other areas in leadership resume. So that's good. That's good news. It's a good trend. Things are moving in the right direction, which is constructive and optimistic to see for sure.
Yeah, and a theme that's also been developing as well, and we've talked about it, is just kind of that overall like commodities complex. Like we talked about energy, we've talked about gold and some other names. So that's really been a trend that we've talked about for the last year and change, and it's kind of continued to develop this year. So I guess just from a high level, Will, like what are you seeing right now, just from like the overall commodity complex as it stands now?
Yeah, so to talk about that, I mean, the commodities market is very interesting, and I think when we look more broadly, stepping back, yes, there's a lot of volatility and lots of ups and downs within it, and we've seen that recently with energy. We've seen that with gold as well. But I do think we're probably in the early innings of what could be a longer term commodity story. And so when you step back and look at things, there have been periods of time where commodities wind up being a pretty good investment, and they'll call them commodity super cycles, where it ends up on a relative basis being a better place to be invested broadly than some other asset classes and some other investments. So you have your stocks, your bonds, you get equities, bonds, real estate, and then commodities as an asset class. And it's always tough to say. No one's got a crystal ball on this stuff. But I think there's a good chance that if some of the other areas of the market have gotten a little bit frothy, whether that's the growth areas or technology or things that have had incredible run over the last several years, commodities is an area that really, from a broad picture, hasn't done a lot the last 10 or 15 years. The last commodities bull market was really in the 2000s, and historically, it's something that there's these long periods of time, and that's why they call it super cycles, where commodities end up doing really well and outperforming and performing better than other asset classes in the market. And I think a lot of things are setting up. There's a lot of chatter that this could be a longer term commodity super cycle, and so it's not just say the gold story or the energy story. The commodities complex is a lot broader than that. But I'd also say for markets like the TSX and for Canada and the Canadian economy, that's a pretty good sign and thing. And I think there's a lot of reasons it is a there's a lot to the topic for sure. But I do think you're likely to see continued tailwinds behind commodities in general. And that's good for the TSX. It's pretty heavily weighted towards commodities overall relative to, say, the S&P 500 and the NASDAQ, which are a lot more tech heavy, a lot more growth oriented. And it's good for the Canadian economy. I think you need commodities to be humming along for the Canadian economy to do well. And so it's one of the things we just want to flush out a little bit, is what the commodity story is right now.
So we've talked a lot about gold and obviously energy, and you mentioned it's broadening out. So what are some of the other commodities that are starting to, show a lot of strength here?
I mean, there's a lot. Like it's base metals, industrial metals, those areas is another big one you see show up in the market. Commodities, it flows into a lot of areas, right? There's hard commodities, soft commodities, there's precious metals, there's natural gas. It's a pretty broad story overall. Not all of them are going to move together in lockstep in the same direction. But I do think what's going on out there is that in some ways it's not to oversimplify it, but it's a supply demand story. And these things go on for a long time, where demand starts to pick up in it for certain commodities. Supply starts to get bottlenecked and slowed down. And you look at what's going on in the world. There's a lot of stockpiling of commodities that's going on, whether it is gold, whether it's precious metals, whether it's oil and gas. There's also just increasing demand that's driving it. And when you start to get that imbalance that's happening, it puts upward pressure in general on commodities. But one thing I would say with commodities is they're certainly not without risk and volatility. I mean, all investments and all asset classes are that way, but they can experience lots of ups and downs. We've seen that with gold. We've seen that with gold equities. You see that with energy stocks, the price of oil. But from a big picture, and maybe one we can flesh out more, they often tend to have a negative correlation or low correlation to other asset classes and equities in general.
Well, I think that's what's made the last 18 months really interesting, is that gold has gone up with the markets in general. They've kind of been moving in tandem, but historically, commodities tend to, not always, but tend to more be inversely related to the broader market.
Yeah, and so longer term periods, which is why I think they tend to make good investments and good diversifiers, especially at the right time, is that if equity markets are not doing so well. So even think of the 2000s as a period. Not that there wasn't pockets and areas and money to be made in those markets, but from the peak of the tech bubble to 08, 09, 2010, wasn't a lot of returns to be made out of the out of markets S&P 500 when you had two major corrections happen. But when you look at the commodities market and complex, there was a lot more opportunity. And that's one of the things that we look to do with our portfolios, our strategy, our tactical wealth portfolio is we want to change and shift sectors and pockets and areas of the market based on changing market conditions. And I think the commodities, the physical commodities, but also the stocks and equities related to them, are showing a whole lot more strength now than we've seen in prior years. And I do think there's a good chance this could be the early innings of a longer term commodities super cycle, so to speak.
Well, just to talk about them being inversely related, we've talked a lot about how tech and AI, maybe it's looking at like the late stages of like the 1990s, 1998, like somewhere in there. But to your point, commodities are actually kind of looking like they're potentially at the early stages. And it seems like a lot of money's kind of rotating out from here over to commodities, which to your point, haven't really done a lot when you look at the last 10, 15 years.
Yeah, and you look at a lot of these companies, valuations are incredibly low. That's the critique you hear about some of the tech and growthier pockets of the market is that how can valuations keep going up? And I don't know if it's yeah, I've said before with AI, I don't know if it's 99, maybe we're more like 97, 98, something like that. And not to say that the whole AI bubble is going to burst, and in fact, it's one of the things that's adding to the whole demand for commodities is the AI story is that it's created massive demand and constraints supply for. We've talked before uranium as example, like energy supply, and a lot of these physical commodities that are going into chips and semiconductors. It's part of this whole story here, so it all sort of threads together, but from a big picture perspective, it's something that we have on our radar. Just that whole commodities complex across the board. I do think energy got probably the one that's most maybe not as much recently in the last year or two, but energy, whether it's oil or natural gas or even uranium, fits into that. But precious metals, industrial metals, and then there's some other less known areas, whether it's like foods and grains, and it even falls into like coffee and livestock and sugar and all these things. They're all part of that broader complex. I think likely we're going to continue to see increased demand, reduced supply, and just a general movement of upwards trajectory on the whole commodities theme.
So as it relates to our portfolio and our process, when we're looking at, as an example, we have gold in the portfolio. Are we looking at gold stocks or the actual physical gold commodity or a little bit of both?
For precious metals and gold, we have a little bit of both for sure, and that story we've flushed out before here. But gold's done very well. The gold equities have done very well. I think generally too in this environment, you're going to continue to see good tailwinds and a good trajectory behind them. But it's with any commodity, there are equities that you can go in and invest in. They tend to be maybe a little bit more digestible for investors than the actual physical commodity and buying that outright through an ETF or another way. But they're both ways to invest in that and play in that. So it's just I think this theme is not going away. And it's more to point out that it's something that's on our radar, on our watch list. We're looking at our research, our charts, our technical analysis. Commodities in general continues to climb and creep up the rankings. I think oil and gas and energy doing what it did in the last month or so is definitely there. But I do think from a market standpoint, that coming off and coming down is a good sign for sure that oil prices are pulling back, but that doesn't mean that other areas, other commodities can't start picking up the slack. And then we're seeing that with gold even this morning or in the last few weeks here.
Well, I was going to make that point. So, last I checked this morning, energy prices were down 10% on the Strait of Hormuz opening up. But to your point, Will, gold has been moving in the opposite direction. It's been moving up. So within the commodity complex, like some are more inversely related to others. So to your point, they don't all move in tandem, even within the commodity complex.
No, they don't, and it's something like that. It's something that, in terms of specific investments, we'll watch and look at. I just think that's a theme we probably want to keep on our radar. Probably one we're going to touch and flush out more. Is that I think that likely it's a good chance that we're in the early innings of a commodities run, and I think there's opportunities, there's risks. We've seen it already develop pretty nicely with gold. We've seen energy taking off in a big way, so it's something to keep on the radar. That it's not dissimilar again from how the TSX is invested. I mean, a huge portion of the TSX is dependent on commodity stocks. So I think we're likely going to see that trend continue where relative to say the S&P 500 and U.S. markets or the Nasdaq, we see better performance out of Canada, out of the TSX, out of these more commodities based stocks, and that ripples through the whole Canadian economy and Canadian market, which is a good positive thing for investors overall.
Yeah, and really good for the Canadian economy as well. So, just big picture, Will, it's been a volatile 4 to 6 weeks. Markets, portfolios have recovered. We're getting some good news just on everything going on in the world, but that obviously changes. What would your message be to investors right now as they're thinking about their money, their portfolio?
I mean, we've been saying this for the last 6 weeks or so since all this started in March. Just stick with the process. We're navigating through this. We're looking at the risks out there. We're also looking at the opportunities, and just stay with the process, which really our investors are. They're staying disciplined. They're sticking with the program, which is good. But we said that specifically, even energy is likely that had gone too far too fast, even though we like that whole commodities space and that story. Once you see oil prices double in a matter of months, it probably means they're going to come off, and driven, yes, by geopolitical and chaos that's going on in the world. But I still think there's a good tailwind behind that whole broader story of commodities as an asset class. So one that we're going to want to touch on it today, but we're going to continue to develop that. And we have good, healthy exposure to the commodities in our portfolio, which is good. But I think the way the world's going and the direction things are headed, not to say that there's not other opportunities in other areas and other markets and pockets, but continues to be something on our radar that we're looking at and keeping an eye on, and want to keep you up to date on.
Yeah, absolutely. And you've been hearing how central banks are buying up gold, rare earths, obviously oil and energy has been the main one. So it's a hot topic where, to your point, countries and central banks are kind of stockpiling and hoarding, which is helping drive the price higher.
Precious metals, base metals, industrials metals. We have those themes, some smaller ETFs, uranium, rare earths in the portfolio. So all of those are ones that very very high demand, limited supply. The way the world's going, there's a big need for them, and that just structurally puts upward pressure on price. So as always, we want you to be wealthy, which is nice. We're seeing that this week, the last few weeks, things humming along and bouncing back. We want you to feel wealthy. We want you enjoying life, enjoying retirement. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. So we'll be back with everybody next week. Thanks, and have a good one.
Have a good one.